think the first thing I wanted to go into with you guys is first of all introduce Simple Crowdfunding. Tell us about that and what made you kind of set it up in the first place, why you went into it, and so on, and kind of where your guys' personal kind of passion within crowdfunding comes from.
Okay, do you want us to answer them one by one, or
just
is it going to all be together? Or?
Just chat. It's perfectly fine. Don't worry about noting down no questions or anything like that. Just fire away.
Okay.
So, sorry, actually, I apologize, I missed the beginning. Are you going to lead the conversation or later?
Yeah, it's being recorded already. We're just going to carry on, run through it as we go, and it's very open form conversational, this kind of thing. So it's really not very structured. It's just literally just having a chat about these different things. So that's the start point. Really, is just introducing Simple Crowdfunding and what you're all about, really.
Okay, that's fine. Do you want to start?
Yep. Okay, just leave phones on silent. So Simple Crowdfunding. Tuksha and I founded it about 10 years ago in 2013, just before the FCA took over regulating this space.
Sorry, no, the FCA came in 2016.
Was it 2016? I thought it was 2013.
We started in 2013. FCA came in 2016.
Oh, there we go.
So. So
I'm not convinced, but there you go.
He's not wrong. It was shortly before the FCA kicked in. It just wasn't just before.
Yeah. Okay. So Simple Crowdfunding, we started it about 10 years ago, and we started with peer-to-peer lending, and then later on we added equities. We found people needed that as well. All the time, really going through that journey of learning how it works, how the industry works, and the quirks of finance and property. We were a little bit in property before as well, and our backgrounds were sort of technology, databases, large systems on my side, and what was that? You can jump in if you see me doing that.
Yeah.
That's fine. So, Alex, I'm a Tuksha, co-founder as well of Simple Crowdfunding. We did start in 2013, and before that, as Davin mentioned, he was in IT. My background's actually in CRM and data analytics. So I ran a CRM consulting business for 15 years or thereabouts prior. So we actually came across crowdfunding by chance.
Okay.
So we're both, and our platform specializes in property. We came across crowdfunding by chance, and it was actually at a property event. And the speaker at the time said, you need to look out for peer-to-peer lending. This is going to be big. And we learned about it early in 2013. By the end of that year, we had our authorization from the regulators at the time.
Wow.
And actually, it's a perfect fit in terms of Davin's technology background, my CRM and analytics background, and having a love of property because we're both property investors. It was a perfect fit. We could do everything we really wanted to do on a mass scale through Crowd and allow Crowd to sort of also embrace this industry.
Yeah.
So we got started by chance.
Yeah, well, as is often the way in most businesses, I find you end up finding them by accident rather than actually going out and making it yourself is very often the way. So I don't think most people realise that you can use crowdfunding to finance property. Is that correct? Is that what you're saying?
Absolutely, and it's the most amazing thing. So one of the biggest challenges is it's always been quite difficult for people to access the property space. So historically, it was available to those who had quite a lot of money behind them, who could sort of invest sort of 50k, 100k, whatever that number is, into a property. I'm talking about investment properties here. So and you needed a very, very large amount of money to come to the table. Now, what crowdfunding does is it basically has democratized that space. So the fact that people can access property investments that they choose on either a loan or an equity basis, for as little as £100 in some instances, is a game changer. Because what that does is, if you look at how property grows on average, it doubles every 10 years, okay, and has done for years. And I appreciate there's Brexit, there's, you know, a number of other things that have sort of hit us since. But overall, every 10 years, property does tend to double in value. People's salaries don't. And so on average, if you're lucky, you'll get a 3-4% rise in salary every year. So that gap from when people are trying to get onto the property ladder, it's just getting bigger and bigger. And so then if people have the opportunity to invest in property and receive property-backed returns at a level that's keeping with the market, whilst they're doing all the other things they need to do, it makes a lot of sense.
It's basically, as you say, it's basically a way to invest into property without needing to have loads of liquid capital behind you in order to do it.
Yes. And the other beautiful thing about this space is, you know, if you are new to property, it's actually quite a big risk to do a property project by yourself for the first time. A lot of people do, and they're very, very well rewarded for it. It is a risk because these things, you're talking about an awful lot of money if something goes wrong. Now, if you can access the property market at a level that's affordable to you and learn from people who are already in this space, that's a really wonderful thing to have access to. And Crowd gives you that.
That's so you can spread your risk.
That's it, exactly. You're reducing that risk as well, which is obviously even better. Okay, so from a crowdfunding perspective, obviously, as you know, we deal with both property and startups and so on in what we do. I mean, from the perspective of crowdfunding, would a pre-revenue startup be something that would fit in?
Possibly. So it is one of those things. A lot of the answers are it's entirely possible it does work, and it does happen. It absolutely does happen. It really comes down to what's the proposition, what's the team and the person behind it, and how do people feel about that? As you know, people invest for different reasons, not just for return.
And there are platforms where raises have happened, where companies are pre-revenue, because the idea behind it, it might be the idea, the technology, the patents, whatever it is behind the company, all the groundwork has been done and they're ready to launch. And crowdfunding, one, is fantastic from a marketing standpoint because it tells you whether or not your idea is going to fly. And whether or not people are prepared to back it. But then it also allows you to scale up faster, because getting that initial seed funding is often the most challenging.
I think one of the main questions I want to understand with you guys is the experience that I've certainly seen with crowdfunding, and a lot of the founders that I've dealt with, and a lot of the people that I know who are in this sort of space have come up with, is that crowdfunding is seen as actually quite difficult because you need to be able to do a lot of marketing to get a crowdfunding campaign to work, and therefore if you don't have the money to make to run a big marketing campaign, you can't make the crowdfunding campaign work, and so you're in this chicken and egg situation. How would you answer that issue with someone?
You do need to let a crowd know, obviously, what your proposition is, and there are a few things to consider here. One is the platform that you're working with needs to be the right platform. So they need to have a crowd that understands what you're doing. So we're property focused. If you had an ice cream business, we wouldn't be the right platform for that business. And
Unless
then the
you're
other
buying
part
ice
of it
cream
is, I'm sorry?
Unless you were buying ice cream locations to
Shops,
sell
exactly.
Yes, there is actually a really big property play there. I mean, the well-known burger joint
yes, exactly.
model is they make more from property than their burgers.
Exactly. Yeah.
So there is a big. That's a very, very good link, actually. Yes. You can. So that's a really important part of it. So the platform that you're talking to needs to have a good and active crowd.
Yeah.
The other part of that is the platform should be talking to you as a fundraiser about how you are going to market and to whom and where.
Yeah.
And a large part of that is financial promotion regs. So they will should be able to sign off your marketing, your financial promotions.
Yeah.
And you can then market to the people that already know your brand and what you do. And so it's kind of a nice intro into brand is a really important thing.
Yeah.
I just want to add about the marketing piece as well. So the platform, every platform also has an investor community. And so the information is also going to go out to an existing investor base, right?
Yeah.
Having the social presence and all of that is important, and platforms will help, or should be, some platforms will help with that part of it as well, in terms of the marketing to extend that reach. And it just really depends upon what that offer's about. So as Davin said, finding the right platform for your requirement is a massive step up when it comes to marketing. It does make things much, much easier.
Yes. Okay. So if you were speaking to a pre-revenue startup who had no social presence at all, no social media, nothing out there at all, would you say to them, look, you're not ready to crowdfund at the moment?
No, I wouldn't, because so if we were looking at it from a property standpoint, so we've got a property company, they have no presence in the market, then what we will do is we will work with them to help get their message out there.
Right.
So there are, within the community, there are people who can help sort of set up websites, social presence, that type of thing, if the fundraisers require it. So that's one thing. It always goes out on our channels and our newsletter, in our newsletters, that type of thing. So we will always try and help where we can. The other thing that we will do is there are communities who also talk about property. So if you go to Facebook, for example, there's loads of property groups.
Yeah.
So then we have a reach into them as well. And so there are different ways to make this work. It is more challenging if the fundraiser does not have any presence at all. It does take longer, and that's just something to bear in mind.
But it's not impossible by any means.
Exactly,
Correct.
It's entirely achievable, and we have developers now who still don't have a massive social media presence, but have a really good crowd.
Yeah.
That now follows them. We help them build, and it's working very well for them.
Excellent. Okay. So would you say there's like a ratio of sort of investment to how much they're after, in terms of how much money they're going to have to probably put into to building that crowd versus how much they're trying to raise? Would you say there's something that like a rule around that?
It really depends upon the requirement. Look, ultimately, if you're looking to raise £20,000, it's going to be a very, very different ratio to if you're raising 300 or 500 or more, right?
Yeah. Okay.
And so there will always be a minimum amount that people should sort of consider when sort of getting everything in place. But it doesn't have to be in proportion. Obviously, the more marketing you do, the more chance you have of speeding up the raise. There are other ways to also manage it on sort of relatively modest budgets.
Okay, that's interesting. So from what would you say, is there anything that you would say would disqualify someone from crowdfunding? What would be the things that, if someone came to you with a particular proposition, what would be the things that for you would be effectively a roadblock to a crowdfunding? Where would you say that it can't happen?
There's a number of things. So as part of our due diligence process, there are a number of things that we're looking out for. So say, for example, but at a very high level, if someone needs some money in 2 weeks' time, do not go to crowd. No. It won't happen, right? Yeah. If they basically tried absolutely every other avenue, and they've had rejection after rejection after rejection, crowdfunding is not it's not a last minute finance tool. It is not, if everything else fails, I'll get it through crowd.
Right.
These are the types of things to consider. So they're the immediate things that will stop something in its tracks, if that makes sense.
Yeah.
And then when it comes to the types of opportunity, what we do is we have a very quick conversation with anyone who's looking to raise funding, and that just by answering a few questions, we'll have a good sense of whether or not it's something we can do. Okay. If you've got someone who's new to, say, the property space, and they're looking to raise £3 million because they want to do a huge development, that would be a bit of a red flag, right?
Right, yeah.
It's those types of things. It's common sense stuff, really.
Okay. Yeah.
That's where the immediate blocks are.
Okay. Yeah, that makes sense. So it's a bit like the sort of the non-property kind of startup world, in the same sense that if you're going out there as a startup and you're hoping to get the funding raised within a month, then there's it's not really worth messing around with that idea. You've got to think longer term, and if you're trying to ask for a huge amount of money for a startup that you've got nothing more than an idea for, then again you're gonna fail on that. So that's effectively what we're saying.
Exactly that. And also if there's something in their background, so failed companies or that type of thing, all of these things will come into play. Now, if someone has a failed company, it doesn't necessarily exclude them from day one.
Yeah.
We would just need to find out more about that.
Yeah, okay.
And it's those types of things. So for fundraisers who are looking to raise early seed finance for their businesses, non-property businesses, the same principles do apply.
Yeah. Okay. And so with regard to the sort of the whole crowdfunding space, where do you see it being most applicable? What's the stuff that to you is the best way for someone who wants to get into crowdfunding? What businesses and what kind of deals and what sorts of things are the best fits for it?
There's many out there.
Yeah.
And a lot of different areas, business areas, property areas, have quite different attractiveness to the crowd, to the public, and you can aim in different spaces. So, for instance, homelessness is it's a big one. So, providing homes that help people, is attractive and would be focused at a different crowd. Eco as well sort of fits into that space.
Yes.
To pure profit, or ideally a bit of a mix, really. Okay. So it's looking for those different crowds that can help. If you had, say, baby products or products that help disabled people, again, there's a crowd there almost immediately. And you've then got to come and show, I guess, a short way of saying it's credibility. Have you got the experience to say, yes, I've run a business or built a business, or ideally like this before? If not, what about your team? Potentially business mentors that may have done that, and you can say, we're working with people who've done this before. It's my idea. We're building this business.
Yeah. So for example, if you were someone who just simply come across an opportunity in a property play, for example, you didn't personally have the experience, but you brought someone in who was a very well experienced property investor, developer, and so on, and you had them in your team, that would qualify you. Whereas if you didn't have them, it would be much more difficult.
Yes.
Yeah. Okay.
Exactly that. So if you've got a new company, the same applies.
Yeah.
If you've got a team around you who've built companies in the past, who've got that experience, then it makes a lot of sense to utilize those skills. I just want to come back on your question about where crowdfunding really can go.
Yeah.
And my answer is it can go everywhere.
Okay.
That's the beauty of it, because if you've got a creative idea, it's creative finance. It's a global market, and so you will always find people who will be tapping or who will love what you do.
Yeah.
So anyone who's got a business idea, who's got something a product they want to bring to market, or an idea per se.
Yeah.
Crowdfunding is a really, really good avenue to explore for that.
And there aren't any
limits.
I suppose what you're saying is it's the best avenue to reach lots of people who will want to back that idea.
Yeah.
And therefore, what you're doing is you're aggregating your investment as opposed to trying to find one investor who's got a deep enough pocket to make the whole thing happen for you.
Exactly that. And if they don't back your idea, you will get feedback.
Yeah.
And so if the product's not quite right, actually, I don't like it in its current form, but if you did this, then I would be interested in investing.
Yeah.
You get instant feedback.
Yeah, and you get a community-based feedback, I suppose, as well, don't you? So you can look at the most common feedback you're getting and understand that that's probably the main priority for you to fix, because you're getting that back more than anything else.
Exactly, and they're going to be your customers.
Yeah.
So, and the other thing about crowdfunding is if you do have 100 people who've invested in your business early on, then actually they're going to be talking about you and they'll be supporting you as a business. So, and that's just a wonderful, wonderful place to be.
Yes, absolutely. Tell me about some like very sort of big crowdfunding success stories, not necessarily ones that have just been on your platform necessarily, but just ones that people might recognize as a name that crowdfunded to get off the ground. I mean, what sort of ones would you call on?
I'm going to give you a quick one, and I did pause a bit when you said ones that people might recognise, but I think it's a genuinely significant one. Everybody knows about the Apple iWatch.
Yeah.
They saw them explode onto the scene. Everybody wanted one. A lot of people have them now.
Yes.
That was not the first watch that communicated and married up to your phone.
Okay.
One of the first ones was called the Pebble watch, and it was on Android. And this was kind of almost the perfect crowdfunding story. You had a bunch of techs who understood technology. They saw that this was the thing to do. They had lots of knowledge and capability to build the thing, but not much knowledge to actually put the business together, although they managed to get that in, and certainly didn't have the funds. What they did have, especially being in the technical arena where crowdfunding took off very early, very quickly, is a big crowd of people who understood what they were doing.
Right.
So they did a crowdfund, and they got their Pebble watch out way before Apple. And it really helped that concept grow. Yeah. So the concept of crowdfunding has been around for hundreds of years. Hundreds and hundreds of years.
I suppose so, yeah.
Others that stick in my mind, the Coolest Cooler, which is basically, in essence, a call box, right? It was on Kickstarter, and we're talking sort of close to 8-9 years ago, maybe a little bit more even.
Right. And
it went out, and the campaign was a flop. But this is where there's like, if you had this port, or if you had a torch, or if you had a little call box within it, or all of this stuff, and they got tons of feedback. The guy in his shed, made all the changes, brought it back to Kickstarter, and it raised over 500,000 or something straight off the bat.
Yeah.
Another crowd raise is Revolut.
Yeah.
And so at very, very different scales, you can have a very, very tiny raise or something that is going to be worth substantially more quite quickly.
Yeah, I mean, I must admit, the early days of crowdfunding models where it wasn't a direct equity into the company, it was basically like a pledge to kind of support them, and you got like a gift or something back or something. I must admit, I never understood that. I never understood why people would put into something like that for effectively nothing in return, except for them being able to say, "Oh, look, I helped make that happen because I put 100 quid into it," or whatever it happened to be. You know, I never really understood that. Whereas I think the equity backed stuff that you guys are doing now, and I think that's definitely the way that more of it's going. To me, it's almost like the startups version of an IPO, isn't it? It's almost like that's how you raise a lot of money very quickly and push your value up, by getting lots of people to buy into the concept. And effectively, that's what you're doing at an IPO stage later on. But it's different ends of the same basic concept. I mean, would you agree that that's about right?
It's similar for sure, and it is like a mini version of it, isn't it? It's sort of getting all your ducks in order, and here's my IM and investment memorandum and everything else you need to do. And it's like, yeah, absolutely, this is going to go out to the masses, and let's see how many people we can get to invest in our business to help us grow. How many people buy it? Yeah, exactly that. So, and at some point, when these companies, if any of them do then go on to IPO, those early investors are going to do all right out of it.
They're some of the biggest winners because they got in when it was effectively the cheapest to get into the company.
Yeah. So it's a really interesting space, and the things that are coming to market, it just means you can accelerate everything that's coming to market. If you've got good product design, what would, without crowdfunding, have taken you a while to sort of get off the ground, potentially, now is so much easier to do.
Yeah. A couple of questions I've got around that is that when I've looked into crowdfunding before with other clients and so on, one of the things that came to that was mentioned to us by one of the platforms that we dealt with, who I won't name here, had they'd come back and said, yeah, that's fine, we can crowdfund for you, the amount you're after makes perfect sense, everything like that. When you've got 50% of it already secured, you can come onto the platform and start raising, which made absolutely no sense to us whatsoever. Is that we're going on the platform to raise money? What do you mean we've got to find half of it first before we get on there? Is that still the way that platforms tend to work, and is that the way that your platform works, or is it different now?
It depends on the platform. So
it's not the way our platform works.
Right.
However, it really helps. If a fundraiser has funds coming in already, it helps the momentum of the whole.
Sorry, my dog barking at the Tesco's delivery driver out there in the background. Don't worry about it. So okay, right. So it's more a case that some platforms do it and they require it just because they feel that's going to give a better opportunity to make the to get the success, to get the thing funded. Is that what it is?
Yeah, basically it's building that traction, isn't it? And so if people can see that actually it has reached a certain amount of funding already, then they're more likely to want to get involved, because they know there's a better chance that crowd raise is going to go ahead. From our standpoint, we don't require that you have a certain amount raised or anything like that. It doesn't
go
work
on there with zero raised complete straight off and with nothing.
It can. Okay. But what we might do is actually get everything ready and start marketing it first,
right?
Before we open it up, because that then sort of again will help will help that funding round.
Yeah, it kind of does it sort of create a bit of a buzz around it, effectively, is what you're saying there. That's that you get enough people already going, oh, okay, this is interesting, and they're waiting for the opportunity to actually go in and invest in it.
Yeah, and in part, yes. So for us, it's more about if people know about it, and sometimes it does take a while just to get that message out there about what the opportunity is about.
Yes.
You know, as we know, with all the online communication at the moment, before, and I'm talking sort of 15 years ago, it took like a number of views of something for it to even register, right?
Right. Yeah.
Because of all the online communication, that has shot through the roof. And so you need to have pushed out a lot more communication for people to see it now. So having that extra time helps.
Yeah. Yeah. Okay. So building the campaign before you get round to putting it on a crowd, that's the way to do it, you think?
Well, you have to put it on, or at least have gone through the DD process.
Yeah.
In order to then have the campaign, because you can't market your investment especially if it's equity or a peer-to-peer loan, without having it signed off by a regulated entity.
Yes.
So the two go hand in hand. You just don't switch on the campaign. So people could go and have a look at all the information. They just can't invest yet.
Okay. Yeah, that makes sense. Okay. So would you recommend that? Would you say that in the regulation that's in the crowdfunding space? I mean, what is that mostly there to do? Is it to prevent sort of fraudulent raising? Is it to prevent money laundering and so on, or is it a bit of everything?
It's a number of things. So it's there to protect investors.
Yeah.
So it's there to ensure that money management is done correctly. So AML checks and everything else are followed.
Yeah.
And it's also there to make sure that anything that's provided is, in terms of the information, is actually a true representation of what that's about. So the whole reason for having all of this in place is so that investors can then make an informed decision based upon correct information.
Okay. So nowadays, crowdfunding platforms all have to have regulation. That's basically the answer, is it?
Equity. So wherever there is the promise, or not the promise, but wherever there is the expectation that there will be a return on your investment.
Right. Okay. Yeah.
So either in terms of an equity boost of sort, or a peer-to-peer loan with interest.
Yes.
That's regulated. Where you've got, we'll give you a widget if you invest £100.
Yes.
That's not. Okay. So that's the distinction.
I see. Yes. So the crowdfunding platforms that operate like that, the ones that to me don't make any sense, are the ones that don't have the that don't have to have regulation because they're not representing a potential financial return.
Correct. It's not an investment. It's supporting a company or a product or whatever.
Yeah, I see. So okay. I mean, where do you see the future of crowdfunding going? Where do you think? Do you see that there's new avenues that are going to go open up in it? Do you see that there's new areas where it can benefit more people, or lower level raising an investment? How do you see that?
I think lots of yeses to pretty much everything you just said.
Okay.
It's the easy answer. As it becomes more and more well known and accepted as it's a real thing, and it's okay to do, and it's regulated and all of that, people will think of more and more ways that they can use it, or that they can help each other, because that's the whole community aspect is often about people helping each other.
Yes.
to fund things.
Yeah. Okay. So with property being sort of the primary focus of your guys' platform anyway, are you generally working with sort of slightly larger scale property projects, or do you? I mean, what's the kind of smallest that you tend to be dealing with?
You know, we've done baby renovations,
Okay.
right? Where people are wanting, you know, the property value is 70,000 or something like that. Right through to the largest project we have on platform at the moment is the build of 62 houses. And so, and everything in between. Now, the 62 houses, we're not doing the whole funding for that. It's a portion of it through Crowd. But the scale is very, very different, you know, from either side, and everything in between. So the thing about this is we've set up the platform so that any property project can be considered.
Okay.
And even if you have quirky projects, we'll consider it. It's obviously going to fit within regulations, but if we don't try different things, we won't know how far we can extend the reach of Crowd. So, so we're quite sort of fluid in terms of the type, you know, the scale and types of projects for that reason.
And when you say a property project, how do you make that distinction? So, for example, would it be counted as a property project if what you were doing is going onto a crowdfunding platform to place on for a house that you wanted to buy, and you were going to get people to crowdfund buying it, and you were just going to pay them back as like as the equity of the house went up? That wouldn't necessarily qualify as a property project, or would it?
It will, because we regard individual investments as projects, if that makes sense.
Okay.
So the fact that someone is raising funds on a cash flow basis in this case, because there might be sort of returns throughout the term of that project or investment as it progresses, and then there'll be the capital uplift maybe at the end.
Yes.
It's still a project. Whilst there's not any major work being done to it, we would still regard that as a project.
Okay. And with regard to something like that, so let's say, for sake of argument, someone's actually looking to raise the funding in order to purchase something, but there's no guarantee they can do that. They just want to raise the funding to do it. Is that the sort of thing that you would look at backing at all, or how would that actually work on the platform?
That's more challenging, because articulating that to investors then becomes more challenging.
Right. Yeah.
Right. Now you could say that this property developer does these types of projects. So they'll buy a house, convert it into 3 flats, and that's their bread and butter, and they'll operate in West London or wherever else, right? And they're raising funds to do another one of those.
Right.
So it could be that the funds are then raised for that, but they will not be released until we can confirm it meets the criteria of that investment.
Yeah, I see what you mean. Yes. Okay. So that's the next question I was going to come on to. I've seen with a lot of crowdfunding, there's say you put a raise amount in there. Say you say I'm trying to raise 300,000 for sake of argument. A lot of the crowdfunding platforms that I've seen, unless you hit that 300,000, all of the money goes away again. So you could raise 295,000, not manage to get the last 5, and you'd lose the lot. How do you guys function in that space, and what's your kind of opinion around those kind of things?
So we came across that quite early on, and that problem actually works two different ways. In that you can hit the target, and you might have other investors saying, "Actually, I really want to come into this project, but it's full." Yeah. So you have the question, well, actually, if we can let funds in without disadvantaging anyone, we should look to do that. So what we did is we worked out that the thing to do is to have an upper and a lower target.
Okay.
So if we hit the lower target, the project is now viable. The reason, the funds go back if you don't hit that initial target is it's not viable. Those funds are,
because you need a certain amount in order to get it off the ground, basically.
Exactly. Yeah, those funds would be at a different risk to the one that has been expressed.
Yeah.
What we then do once we've hit that lower target, great, so we're going to go ahead now. This is good. We'd like to get towards the upper target. Everyone is aware that these two targets exist.
Yeah.
And within the time scale of getting the funds in, processed, and over, we carry on to try and to hit that upper target.
Okay.
But there is a ceiling, because again, if you still have more investors who want to go in, those funds don't need to be used for that project. So what's going to happen with them if we carry on raising above the ceiling price, in essence?
Yeah.
And then that doesn't make sense either, because then potentially investors will have higher exposure, because the developer will have less equity in the project.
Right. Yeah.
And so there's lots of different things that we're considering when we're looking at the overall structure of a project.
Yeah. And if that was into, say, a standard sort of startup rather than a property project, that would mean there's dilution happening even before the first round's done, effectively, is what you'd be saying.
Exactly.
Yeah,
exactly that. For a startup, it might be that they can consume more funds.
Yeah.
They are absolutely diluting more of their equity, but it might give them additional funds to sort of get going faster.
Yeah.
That's a business decision at that point, right?
Yeah. Yeah, exactly. That's it. And so that sort of target bracket of say the lowest end and the highest end, how wide is that able to be? Because obviously, there's a startup might say, we can be viable if we raise 50 grand, but we'd like, $750,000. How wide can that up and lower limit actually realistically be in your opinion?
So if we focus on just property for a second,
sure.
that limit, there is a caveat to that, in terms of we reach the minimum amount, but we know the maximum is required overall to get that project where it needs to be.
Yeah.
The developer will commit to putting in anything from the minimum to the maximum,
right,
in order to make that project work.
Okay.
Right.
Yeah.
So that's how that typically works. And so in terms
almost a
of,
bit like matched funding.
Yeah. In essence.
Yeah. Okay.
So they're basically just taking any additional slack. So that means then that project will go ahead. And the difference between the minimum and the maximum is not massive, because the developer is going to be funding that difference in potentially. Right.
The other part that I think is very relevant is, and your example is a good one, between 50 and 750.
Yeah.
That would make a significant difference to the investments that came in first.
Yes.
If you put in 50, thinking it will go to 50 or 100, and then it goes to 700, that, like I say, you may have diluted those funds. It will change the plan quite considerably, and those are two of the factors which help restrict how wide that window can be. Obviously, if it's a 700 and you put another 20 in, it's not going to change it that much.
That doesn't make a major difference.
If it's too wide, it will change it a lot.
Yeah, makes sense. Okay, so what would you say to someone who is at the very early stage in a startup for of any kind, property or not, who is considering crowdfunding? What would you tell them to do before they go down the crowdfunding route? What would you tell them to make sure they've thought about first?
I would tell them to find platforms that are suitable to what they are looking to do.
Right.
Sign up and basically watch every single raise progress, and more importantly, take note of all the past raises where it's a similar environment or situation to what they're looking to do.
Yeah.
Because I don't think there is any massive advantage in starting everything afresh. If something has worked, have a look at it very closely and just follow it and see how it's changing. Look at the communication that's being pushed out, on board. Look at if they're registering as an investor, it doesn't commit them to do anything.
Yeah.
But then they see what investors go through in order to actually be able to access investments. All of these things are just background information that will help them or provide them with the additional information they need. So when it comes to their own campaigns, they know exactly what they need to be doing.
And you effectively, you're looking at what have they presented to investors, and investors have then decided to invest. You can add to that, and you can look at projects which are similar to yours, which didn't get funded. What's the difference? Why did some get funded and others not?
Right.
Is it the crowd? Is it the platform? Is it the way they presented? The brand? There's so many things that help people understand what your proposition is and whether they like it.
Okay, so it's like understanding the success and failure factors effectively.
Yeah. And also working with people who are in this space, who are supporting fundraising. So say in terms of the support that Spartan provides to new or companies looking to raise funds.
Yeah.
All of those things are really important, just to have all your ducks lined up. And because then you'll know that actually we need to have a company set up, we should have a website, we do need to have online press, all these things, these little things which might actually seem little will make a difference. And starting them early makes a lot of sense, because as you know, creating your brand presence online is not something you can just do overnight. You need to work at it, and so starting those things early also really helps.
Timeline's a really good one there that you're talking about, that creating it early so that there's a bit of history, so that when investors start researching you and looking you up, they're finding you in several places, and finding that you've been around a while and you've been adding content and doing stuff which is relevant to the goal, which kind of takes you to the flip side of that is the future. Okay, so you found people to do the raise with. What's going to happen in the future? What do you want to happen in the future? The reality is you want to increase your presence to the right people, and you want to get funded more and more as you grow.
Showing you can stand the test of time, I suppose, in some ways, isn't it? It's showing an investor that we have been around for a little while. We haven't just popped out of the woodwork and now we want a load of money. It's you're showing that you've actually you put a certain amount of time and effort over a certain length of time to get to where it is, which shows that you've got the sticking power to go further. Is that how you'd explain it?
Yeah, and that they're serious about it. It's not something, I'll stick up a web page and I'm done. All of these things are important. Exactly. So it's just how you present yourself, because if someone sees something, so when we do the marketing, what typically happens is that first comms is usually seen on someone's mobile, right? And if they're interested, then they might log in next time they're at their PC and actually have a proper look. So these immediate things are really important. And most people nowadays, if they see something that's of interest, they're going to Google you. And Google you and your business, and that's probably the first thing they're going to look at. So these things are important to have in place. Definitely.
Okay, great. So where can people find you guys when they come to look for you?
We're online. We have a lovely website. simplecrowdfunding.co.uk.
Nice and easy.
And there are a lot of resources on there: videos, explainers, frequently asked questions. that's absolutely worth having a look at. You can contact us for questions. And the other thing we'd absolutely recommend is actually to go through the registration process. It's, I think it's a very good process. It asks you questions about your understanding, and it helps you understand what investors who may come to then look at your project to invest in you, what they'll be going through to help them understand what they're doing.
Fantastic. Excellent. Well, I think that is a very good place to end. Thank you very much, guys. I really appreciate it. Went really well, and I look forward to speaking to you both soon. I actually have to